Hello, hi, welcome again to the new Ask Atta session. It's a session where we get answers and pressing questions from all things in relation to ECF as well as investment. My name is Aimi Aizal. I'm the co-founder and also the director of Atta Plus. And together with me today, we have a guest, Izaldin. I will introduce him on him later on. But before that, what's new on Ask Atta today is that we, unlike typically what we had previously, we actually open up question during the session itself. This time around, we do have a question that you can actually ask us, and from there on, but those who actually wanted to ask question, you can still do that during the next almost 1 hour session also, at any point and any time, and we will try to answer as much as possible. Another thing that is new also is that we have a goodies this time around. Out of all the questions that you ask us, we will pick up the best questions, and we'll be giving 198 vouchers, a token for all of you, to the winner, to kickstart an investment in Atta Plus itself. Right? So anyway, together with me today, we have Encik Izaldin Hasnan. He's the head of strategic asset allocation, which I wanted to ask him earlier, but he said, leave it to this session where he will explain that to me and to all of us. Of PNB, I think all of you know, for those who are not aware, not so familiar with it, PNB is actually the largest investment holding company that holds almost every main counter that you can think of, like Maybanks, Sime, and you name it. Yeah. And I think I'll leave it up now to Izaldin to introduce himself.
Okay. Thank you, Aimi. So yes, I'm the head of strategy allocation of PNB, the biggest investment fund manager in Malaysia. So a little bit background about myself. So I joined PNB back in 2011 after I graduated from university. So my first job back then was in the CEO's office doing corporate finance. So I had a lot of experience doing equity investments, mergers and acquisitions, as well as taking care of the portfolio companies of PNB like Sandar, and after that, I joined strategic asset allocation department in a pioneering team. So this department was newly established back in 2017. So the role that I have within the department is to oversee the portfolio construction and optimizing our asset allocation strategy for the different funds that we have in PNB. So we have 16 funds in PNB which have different objectives, financial objectives, and risk tolerance and constraints, and all of these funds then have to have a different asset allocation, long-term asset allocation strategy. So I'm responsible in advising our fund managers on what would be the optimal one, given our expectation on where the market's going to head. So that's my current role at the moment at PNB. You muted, I think. I mean, you're muted.
All right, this is the thing about when you do it online. I thought I'm talking to you, but somehow it's muted. Okay, no, sorry. Yeah, that's pretty much it on Izaldin, and we pretty much know now what exactly head of the strategic asset allocation is all about. Before we start, I need to actually let you know some disclaimer which I was asked to read. So I will read that out so that it's clear. Kindly take note that all the information and contents shared during this session are purely and views and opinions of the speakers, based on their observation of the current financial information, patterns, and trends available in the public domain. Neither we nor the speakers give any assurance or representation that the information or content shared during these sessions is accurate, complete, or verified, or that you should place any reliance on the said information or content in achieving your investment goals. We strongly encourage our audience to invest carefully at all times and to seek professional independent advice and carry out independent investigations, due diligence prior to acting. All right. All right. So let's just start. I think just to look at some of the things before we go on what need to go, how 2021 going to be like, right? I think probably just a quick recap on what happened over the past year. 2020 was a very exciting year. COVID-19 pandemic, again, we'll see some of the trends in the market, and also various asset allocation of investment of various performance. Precious metal gold is leading the pack with 24% last year to date return. Perhaps due to the weaker dollar. We see some exciting movement also in equity. As you can see, early part of the year, that Nasdaq it went up, quite high, and so on. But most of all, I think will probably be one of the most pressing and exciting question and topic that a lot of people keep on asking, and we see that during the pre-questions session as well, is cryptocurrency. Cryptocurrency, of course, in particular Bitcoin, which actually mark a huge three-folded gain, almost 300 times of what it was early the year, and it's just mind-boggling, and perhaps something that we can actually discuss later. Of course, property is also an exciting scenario, but we do see that REITs in general, the excitement is a bit much lower due to the yield. During the pandemic, what we saw is that a lot of yield from the property has gone down tremendously. But again, there are quite lots of interest in terms of actual investment in the real property itself, especially now in Malaysia, where people are real property hunting for cheap investment for perhaps either future development as well as capital gain. All right. So in that case, just to get from comment from Encik Azalin, what's your commentary on the performance of the assets classes in 2020 in Malaysia and perhaps the entire global itself?
So as everyone is aware, 2020 is a black swan year in my personal opinion. No crystal ball can anticipate the global pandemic that we are having right now, the COVID-19 pandemic. And because of that, then a lot of the performance of the asset classes that we have is at the beginning of the year of 2020 was quite depressed, right? In March, we had a lot of performance of the equity markets going down deep. For example, Malaysian equities reaching its lowest probably in the past 9-10 years, about 1,200 points before recovering back towards the end of the year of 2020 to about 1,670 something. So in totality, we have a total return of about 5.7% for Malaysian equities. The key message is here: no one can anticipate what had happened in 2020, right? What we can do is we can look back in hindsight and see how have the asset classes have performed with regards to the pandemic and whatnot. So what happened in 2020? We had COVID-19 pandemic. We had a collapse of demands because of the restrictions in movement. So everyone is locked down in their houses. And because of that, we have oil price shock as well. We have a price war in between the OPEC countries. And also because of the demand going down, no one is driving any cars or manufacturing anything, so lower use of energy there. So in a way, we have slowing down economy, right? So Malaysia is recording recession, so as the whole global as well. We have a global recession. We are expected to have a global recession in 2020. The data has yet to come out, but it's pretty much a recession. And amidst this backdrop, what has happened to the asset classes? So on the equity side, interestingly, despite having a quite bad economic backdrop, we are seeing some of the countries actually recording positive returns, right? USA, for example, we have about 16% total return for 2020. S&P 500 rose to all-time high even in 2020. No one could anticipate that. It's the reason why is partly because of the positive expectation of the investors towards the end of 2020, when we had news of vaccines being discovered and being rolled out and distributed. Because of this expectation, and the S&P 500 rallied up, and so as others capital markets as well. Similarly, for Malaysia, as mentioned earlier, we have recorded a 5.7% total return. Again, the rally is towards the end of the year on the background of positive news. But a fascinating thing is about Malaysian markets. It's not an even recovery for our capital markets. If you notice, only certain sectors that can you hear me?
Yeah, I can hear you.
So it's not an even recovery for Malaysian market. For example, we have, as everyone knows, we have healthcare sectors in Malaysia really rallying up in 2020, and in particular, glove sector, and because of the demand on the gloves due to the global pandemic. So we've seen actually one of the interesting statistics that everyone should know about, that in 2020 we had an outflow of foreigners from our countries, but we had been supported by the retail participation of Malaysian investors, the mom and pops, right? On average, we have about 25% of the volume traded by the retailers. But in 2020, we have about 40, double the amount of participation on average. And most of them pile into the healthcare sectors. Personally, I think the healthcare sector right now is a bit overpriced, but the price is going up and up. So be caution. Do not just jump into the bandwagon. Do your research when you want to find sectors to invest in. So that's pretty much on equities. Fixed income, bonds. For those who are investing in bonds, 2020 is a good year because of the rates being cut down, interest rate becoming lower and lower, and that has driven the demand for the fixed income. So the fixed income prices have gone up, although the yield has gone down. So whoever trades on the fixed income, the bond side, expected to have good gains in 2020. Gold, as you mentioned rightly, it has been performing very well because during crisis, gold always has that characteristic to perform very well because of their limited supply, as well as because of the inflation hedge characteristic that it has. For example, during crisis, we're going to have a lot of governments printing money, doing quantitative easing, putting money more into the markets, which could drive the inflation higher. And that's why I think people flock into gold in order to avoid that their money being the prices being lowered down by the inflation and things like that. Yeah, so I think that's the rough snapshots that we have for 2020. We look at equities, we look at the fixed income, we look at the commodities like gold and whatnot. I forgot about the cryptocurrency you mentioned.
Yeah, I just want to ask you that.
Cryptocurrency is a different animal altogether. For me, personally, I do not believe in the Bitcoin or in the cryptocurrency in general. But I've seen I've seen how the prices have gone up and gone down, and definitely we've seen it last year that it has gone up so high, partly because of the limited supply. It has theoretical limits of how many Bitcoins are circulated in the market, right? And because the demand goes up and the supply being constant, then we had these prices going up. and it has gone up to I think about $50,000 or $50,000 per Bitcoin.
Goes up, yeah, more than 40,000. Yeah.
Yes. And we have set 6,700 cryptocurrencies, and Bitcoin led the pack, right? So the problem that I have with Bitcoin is this: is that it's not yielding anything. It's pretty much like oil or gold, and it doesn't have any cash flow. And I think the reason why it has gone up is because of the speculations. In terms of utility, it's very hard to use it as a digital currency because of the volatility it has, right? So it's very hard for the retailers to use it to price their products and services, because the money can go up and down. And then because of the money can go up and down very easily, even people would find it hard to spend. Why would I spend it if I know the money is going to go, the value of Bitcoin is going to go up, right? So for me, it's pretty much driven by the speculation and whatnot. So that's my view on Bitcoin. Another one is that it's very hard to value Bitcoin. For me personally, if you want to invest in something, we will want to invest something that's undervalued, and then and when the market is aware of the true value of the investment and then start to put money in, that's how we make money. But for Bitcoin, it's really hard to do a valuation on it. So that's my take on the 2020 and on cryptocurrency and Bitcoin.
All right. Okay. So that's what happened last year. Let's look at what we think going to happen this year. Yeah. So I guess before we go in that part, perhaps I just want to recap what happens that we have done a survey out of 270 individuals, and we have received some responses in terms of what they're going to invest, this year for 2021. So as you can see there, as much as you perhaps hit cryptocurrencies, it actually come up to quite a high number there. Of course, stocks 35%. We have cryptocurrency 31%, fixed income 11%, which is expected, and 23% out of gold. So what's your take out of this? Yeah, and what do you think really going to happen?
Yeah, so I think we look at the poll earlier, and I think the biggest asset class that the samples that has voted upon is on stocks. I think about 35%, right? And I think that is the same as my personal view as well. So typically after recession, after crisis, you're gonna have the risky assets pulling back from the lowest level, right? I think same thing is gonna happen, and it's already happening here in 2020, late 2020, and in early 2021 as well. So the theme for 2021 is economic recovery. So previously in 2020, we had a lot of people taking money out from equities, putting into fixed income, putting into gold, because they are safe haven assets, less risky compared to equities. But now that we have positive news on the vaccination and the distribution of the vaccine, investors are starting to have positive expectation on the general economy. So we're going to have investors piling in money into stocks where previously underperformed. Typically the cyclical stocks and the value stocks. So cyclical, what I mean by it is stocks that perform very well when the economy goes up. So like financial stocks and things like that. So financial sectors and things like that, the materials and the constructions and things like that. So previously they have been underperforming in 2020, but come 2021, we are expecting the vaccines to be rolled out. We are expecting the lockdowns to be lifted up in the second half of 2020. We are expecting the economic activities to start again. So to ride over this expectation, then equities are definitely one of the asset class to watch out for on certain sectors. With regards to other asset classes, I think I've seen cryptocurrencies the second highest. I think it's very much on the back of the expectation on cryptocurrency gaining more and more utility, getting more news because of the
Popularity. Yeah.
from home. Yeah. So the technology stocks in 2020 has received a lot of attention, and I think that somehow involves cryptocurrency as well, right? Because it's part of the technology sector as well. So what we have, even recent news, we have PayPal, PayPal that they have announced that they're going to take Bitcoin as part of the form of payment in their system, right? So that perhaps on the back of this news, that we are seeing a lot of payment gateways out there starting to adopt Bitcoin. Makes people think about, okay, Bitcoin now is starting to be mainstream. So I think that's partly the reason why I think the Bitcoin has gone up as well. But as I mentioned earlier, I have my personal reservation on the Bitcoin. It's hard to value Bitcoin, and because of that, it's hard to find an exit and an entry point and exit point with regards to Bitcoin or cryptocurrency in general. Maybe if I learn a little bit more, I would know how to do it. But for now, I'm a traditional investor, so I prefer to stick with equities and fixed income and whatnot. I think we've seen gold. Gold is one of the preferred asset classes.
24%.
Yeah. I think the problem that I think will go in 2021 is that since it's going to be since the theme for the 2021 is going to be economic recovery. So people will start to, they're no longer scared. They are more optimistic. So as a result of that, people will start piling out from gold or safe haven assets like fixed income and put more into equities to ride off the economic recovery. And because of that, I'm expecting gold to underperform for 2021. But however, there's the risk to my personal opinion, is that if the vaccines do not work, or the vaccines take a long time for it to be distributed, right? So we're gonna have further lockdowns. We're gonna have more surprises, and the risk is gonna creep up again. Then gold will start to go up again. But at the moment, given the data, given all the data points that we have, I think gold has done very well for 2020. But for 2021, I think we have to rotate away from gold and go into equities in order to see positive returns. I think last time I remember, what's the last one?
The last one was property, I guess.
Yes.
Fixed income,
yeah. So real estate. Good thing about the current market is that we have quite low interest rates. It has been the lowest in Malaysia, for example. Right now, the OPR, the overnight policy rate, which determines the base rate of the banks out there for the financing rate, has been the lowest that we've seen, 1.75%. And I've seen how my mortgages, have gone down as well. So much. So I think for those people who have money, they really find this an opportunity to actually purchase real estate, residential and whatnot. But generally, I think if you look at real estate, we have to look at the different segments. If you look at the office segments, is doing very well right now in Malaysia, for example, because of the huge supply that we have in office, as well as now we have a new trend, people working from home and whatnot. So there's less demand on the office. But I think there's a lot of pockets of opportunities for industrial assets. So industrial assets, for those who are interested, those that provide warehouses for distribution of products. And for example, if you buy online from Lazada or from Shopee, these items they need to put in a warehouse. So logistics, logistics, not industrial, logistic. So that's one of the pockets of opportunities that the investors could try to look at within the real estate segment for Malaysia, as well as globally, because it's a global trend as well. Residential, as you can see, for me it's a bit mixed. I think in Malaysia, yes, we have one of the lowest rates right now in terms of interest rates. I think people that have cash would buy this real estate, but generally I think for residential is still a bit of an oversupply market. So because of that, then I have more of a negative view on the residential segments. So that's my view of real estate in general.
Okay. All right. I guess we go for the next session now. Questions. We along the line there are some questions that we received. Perhaps we can answer as we go on. From Kai Hisha Ilina Shari. Wow. Okay. The name is very mouthful to pronounce. Hi, Kalisha. So hello. So is it a good year to invest in property? That was the question. Izadin, what do you think?
Yeah, so my view, as I've mentioned earlier, so it depends on the segments that you're looking at. So we have, for example, we have offices. So we have commercial buildings. We have residentials, the houses that people live in, and we have logistics or industrial logistics, the warehouse that I've mentioned about. I think generally speaking, property has been real estate in Malaysia has been an oversupply market. There are more units, there are more vacant units out there versus demands, generally speaking. And I think a lot of people are back then, before 2020, having to pay a lot of mortgages, unable to offload their holdings in these real estates to other people because of the oversupply. But 2020 has seen the rates going down, so that has somehow helped out with the interest payments of these houses. But I do still see that that generally the real estate is still an oversupply market. However, for certain segments, for example, logistics, right? As I mentioned, due to the e-commerce trend, due to people from home, they tend to buy online. You can see, for example, I myself have, for example, buy a lot from Lazada and Shopee.
Right? Yeah, a lot more people. Yeah, a lot of people who has never done that before. Yeah.
Yeah. Yes, exactly. So my grandparents also start to look at buying online.
Tell me about it.
Yes.
Tell me about it.
And because of that, I think there's a demand for logistic warehouses out there. So if you can have access to this kind of investment, it would definitely be a good buy. But a good asset to invest in. Again, this is not a recommendation. This is my personal opinion. Just would like to repeat the disclaimer that I has mentioned earlier in the beginning of this session. So I might have a view on the logistics part of the real estate in general.
All right. Yeah. Okay. I know you doesn't like, or you are not a believer of Bitcoin, but I still have to ask you. You are just like me. Actually, I'm technically not a believer, but this question is quite important. Somehow I've been bombarded by this sort of question, not just from the people that I know, but also, as you can see, some of the questions that have been laid out to us earlier was also very much towards this. So the question is, will Bitcoin continue to be a lucrative asset class to invest? Well, I mean, this is your personal opinion.
Yeah. So define lucrative asset class, right?
Okay.
So I imagine will investment in cryptocurrency generate outsized returns? To be honest with you, I don't know. But given the trends that we have, it has gone up very high, very much. I think it's if I look at the charts yesterday, it has gone up from $10,000 to $40,000. That's about 300% increase in returns, right? And some people say it's going to go up even to $100,000. And for me, I just couldn't make sense of that prediction. It's going to go up again. Right. We have seen it going up in the past couple of years ago, and then we have seen how it has gone down like 80%, right? For example, if you invest 100,000 ringgit in Bitcoin, in one day you could have the value gone down to 20,000 ringgit. And if you're an investor, you have to ask yourself, do you have the risk tolerance to tolerate this kind of volatility in the cryptocurrency? if you do have that high risk tolerance, because it is a high risk and expected high reward kind of investment, and then go ahead. For example, myself, I don't have much of a high risk tolerance, and I don't think I'm able to stomach the movement in cryptocurrency myself, right? I'm a more of a equities and fixed income, mixture of that, a diversified portfolio kind of person, and try to optimize that allocation rather than piling up the whole thing into cryptocurrency. But saying that, cryptocurrency has been known as a good diversifier of investment portfolio. So what does it mean? A good diversifier. So good diversifier means it has zero or negative correlation with the other asset classes that we have. For example, I think it's hard to find a correlation between the price of the trend of Bitcoin versus the trend of equities as well as fixed income, right? So it could be so it could be zero correlation, and because of that, then it could be a good addition to the existing portfolio that you have, right? So when the equities goes down, for example, last year, or fixed income goes down, then it could be that your cryptocurrency gone up, so that could help with your portfolio. It's just that even though it is a good diversifier, the problem is the volatility itself of the asset class, right? It can go up and down like in 2 digits percentage, right? 80%, it can go down, it can go up in an instant, and that for me is a turn off personally. So going back to the question, will it continue to be a lucrative asset class to invest in? It could be. It could not be. It couldn't be a bad one this year. I wouldn't know. I don't have a crystal ball. But given the characteristics of this asset class, I would personally stay away unless if you have a high risk tolerance to be in this asset class.
Yeah. All right. Okay. You mentioned earlier that probably the reason being why the value of the crypto, the Bitcoin itself, in particular, is simply because of the limited circulation out there in the market. And I think this is also almost similar to what gold had, many years ago. It's very limited as well as the value goes up. I guess the only reason why Bitcoin had somehow gone, tremendously too high, or and very volatile, as you mentioned it earlier, is simply because it is supported by technology now, whereby the value, the high demand and supply, is actually packed by again, it's actually been supported by the technology. And I think for me personally, I'm more intrigued towards the technology behind it, which is the blockchain, how it moves and how it can be applied to many other things, in business as well as life. I would think so.
Yeah. So blockchain is interesting. You say it's different. So cryptocurrency is a different topic. Blockchain is completely different topic. And I really echo what you just said. I mean, on the more interesting part is the blockchain. Funnily, blockchain actually has been introduced back then in 1990s, but hasn't got any traction until the Bitcoin Bitcoin was introduced. So Bitcoin itself was introduced, I think, post global financial crisis. I think the main motivation of the Bitcoin introduction is that you do not want to have a central third party controlling the money, right? Because what happened in 2007, 2008, we've seen how the financial markets collapse because of the banks overlending, for example, into risky assets, and people buying without much awareness of that. The mortgage-backed securities issues, the real estate market in the United States, and all of that, right? So 2007, 2008 highlight that there are institutions that are too big to fail, because of these institutions that are too big to fail, like the banks, the JP Morgan, the Bank of America, and whatnot in the US. Then you have the government pumping in money to save these banks, and I think there are people out there that, why only the banks need to be safe, and then that's why we have people. I can't remember the name of the person who introduced the Bitcoin, but the motivation behind the introduction is that how do we have a new financial system that doesn't have do not have the needs for banks as an intermediaries, right? So
Right.
I think that's the basis of the Bitcoin. So it was introduced back in 2009, and now it has gotten a lot of tractions because people touted Bitcoin as the digital currency, the currency of the future, right? It's a good, apparently it's a secured transmission system. So if you want to transfer money to the people, it could be done securely, and it can be done in mere minutes compared to, for example, if you want to use intermediary as banks, it could take 1 or 2 days. So I think there's appeal in using Bitcoins, or even and I think what's more appealing is using the blockchain technology itself in transferring money and things like that, right? So blockchain is essentially a distributed system, right? Where if it's related to cryptocurrency, it means that it can store any transactions and manages and record all these transactions into blocks, and then they are all chained up and then distributed across all the different computers out there. So I've seen some other use cases of blockchains. For example, they are suggestion that to use blockchain as a way to vote for election. So you're gonna have people, for example, being given coins, and then this coin is as voting as votes. So we're gonna create a card, for example, the candidates, and then if you believe in the candidate A, they just give 1 coin to the candidate A. So, and all of this will be recorded in a blockchain. So yeah, so I like the technology as you mentioned. I mean, Bitcoin, maybe not now.
Yeah. All right. Okay. Okay. I think that would be a very long, we call it, topic to address itself. In fact, probably Atta Plus would be able to organize one of these days, a specific topic on Bitcoin and Bitcoins on a topic of blockchain, and also the fact, how the entire banking, questions, would be like, in the future. I think that will definitely be affected also in the future. Okay, there's another question before I forget. We have seen the multi-year outflows of foreign funds from Malaysia equity market. What catalyst can reverse this? Okay.
That's a interesting question, and for information, I think 5 out of 6 years we have seen negative to 0% total performance of our KLCI. I think one big driver of this underperformance in 5 out of 6 years in the past is because of the foreign outflow from the equity market. I think if I have to pull up my statistics over here, I think the total net foreign portfolio in 2020 is an outflow of negative 6.3 billion. Right. And as opposed of 2019, we had a positive of 8.8 billion. So what has happened in 2020? I think if you're going to explain what happened in 2020 in terms of outflow, because only once we know the reason, then we can tackle when we can come up with a solution. So I think for 2020, it's a bit of as I mentioned earlier, black swan year, an extraordinary year. So we have a lot of people being scared. We have foreign investors scared of the crisis that is happening. So a lot of people go back to safe haven. So the typical safe haven is US Treasury, which is US bonds. So this does not just affect Malaysian market; it also affects other emerging markets. So you're seeing actually a foreign outflow from all of these emerging markets, from Malaysia, from Thailand, from Indonesia, to gold or to US Treasury in the US, and that's why we're seeing US Treasury yield being so low because of the demand, people buying into the US Treasury. Okay, so then the question is, how could we reverse these foreign flows? Yeah. So we have to make our equity markets more attractive, right? There are things that we can control, there are things that we cannot control. I think for 2021, we are expecting an inflow because of the recovery play. In fact, towards the end of 2020, and early 2021, we are seeing foreigners coming back into the emerging markets. So their risk appetites have gone up. So they're starting to find where else can I get yield in these markets. We know that in the developed markets like Europe and the US, for example, the yield is quite low. So people tend to find, okay, where can I get a high yield? So they go to emerging markets like Malaysia and Thailand and Indonesia as well. So I think for 2021, I'm personally expecting that the foreign flow could be positive again. So that's more on the general macroeconomics response. But in terms of what we can do here in Malaysia in attracting more foreign flows, I think one of it is political stability. So we've seen our Prime Minister Tan Sri Muhyiddin has declared a state of emergency, which effectively puts the possibility of having election. I think until August, right? So the possibility of having election way back until August. So that has provided some stability in terms of what we can see in terms of policy, in terms of political landscape and things like that. And because of this, I personally think that it is good for the foreign investors. So they're seeing that the political landscape in Malaysia being more stable, so they would pile more money in the short term. But that depends what's going to happen after the state of emergency has been lifted up. So that's one, stability. I think second, in terms of the equity market itself. So one way to attract more foreign monies is to be more transparent and be more relaxed in terms of the foreign limits into how much they can buy into the stocks and things like that, right? So these are the things that regulators could do, for example, in attracting more investor money into Malaysia. Yep.
All right. Okay, we do have another questions. Thank you, Zadin. Okay, let me see. Assalamualaikum, Encik Atta. Encik Atta, so my name is Atta now. Encik Atta, Encik Izaldin. Thank you for this session. Really exciting. In 2020, the insurance industry grew instead of declining. Let's see, like most businesses. So, is it wise to invest in insurance products in 2021?
Right. So there are two things here. One could be buying insurance companies, buying stocks in insurance companies. Second, it could be buying the insurance product itself, right? So if I take so I'll answer these two questions. So the first question is insurance stocks or sectors good in general. I think insurance is part of the financial sectors. So for me, in an economic recovery play, financial sectors has been quite a consistent beneficiary as people pile back into cyclical sectors like financial industry. Within financial industry, we have banking, we have insurance. So in general, I think I have positive view on the insurance industry in general for 2021. Mm-hmm. In terms of insurance products, so this is a bit different. So it really depends on your needs as a person, right? So generally, as a good personal finance advice, buy insurance to protect yourself from critical illness. If you find yourself contracting cancer, things like that, right? You could use your medical cards and then leverage insurance as to pay for the cost of your medical treatments. Especially in 2020, we've seen how COVID-19 has put a lot of scare in a lot of people, right? And right. I think because of this, I think people need to be aware on how the insurance products could be used to protect themselves from this kind of diseases, from having to pay too high medical costs, right? So insurance products could help you to mitigate that expenditure. Mm-hmm.
All right. Okay, great. Okay, I think I mentioned earlier there was a pre-event where we actually get people to ask questions, and we actually have a winner. Yeah, we have a winner, which is actually. So I would like to put up the question which was asked, and this is the winner who actually received the 198, and we will be able to answer that question. The questions come from Mr. Nicholas K. So the question is, as a retail investor, clearly COVID has changed things and investment horizons are definitely under a lot of scrutiny. Any best practice or things to look out for when making or choosing an investment this year?
Yes. Yeah. So I think one way to answer this is to look at the investment process. So I can tell you how institutional investors like PNB does this process is very structured. Right? So when we look at what to invest in, we first look at what are our objectives, right? How much do we want? How much of a return do you want to get for a single year, and how much of risk tolerance that we are able to tolerate to get the returns, right? I think to relate to the retail investors, that will be what will be my goals in 20 years on the road, right? How much of retirement money I want to have at the end of the day? For how long do I want to earn this amount of money monthly after I retire? And from then what you want to do is you want to find out how much do I need to save every year, and then how much of return that I need to get in order to achieve my objective. So I think first and foremost, I think you have as an advice to the retail investor is really know what your goal is, because everyone has a different goal. And a second is to understand what kind of investor are you? Are you a risk-averse investor, or are you a risk-seeking investor, right? As I mentioned earlier in the early session, if you are someone that can tolerate high risk, then why not invest in cryptocurrency as a good diversifier? If not, if you're like me, I'm quite risk averse, a bit stable, so I stay away from these high risk products. So depending on your risk tolerance, then you could pretty much identify what sort of asset classes that you're gonna look at, right? So if you're risk averse, you're probably more towards the fixed income. If you're still young, you probably can take a lot more risk, and you can look at the equities and things like that. So understand your financial objectives, understand your risk tolerance. So that's the first step that you need to do. Then second, once you know who you are, what you like, and what you tend to be afraid of, what you tend to like, so then you can start to look at, okay, what sort of asset class that can fit my profile, right? So we have equities, we have fixed income, we have commodities like gold, we have cryptocurrency, the alternative assets, so we have real estate, and even private equities. So within the equity sector itself, we have equity asset class itself, we have many sectors, right? We have healthcare, we have technology, we have consumer staples, sushi and whatnot. So there are a lot of choices out there. So that's my point. So to understand which one to invest in, you have to do research. Right? You have to know how to value what is undervalued, what is overvalued. If it's overvalued, stay away. If it's undervalued, then try to find your safety margin, right? Find out how much of an undervalued entry point that you are willing to come in for any investment. So once you are able to value and then find out your entry point, you have to know what's your exit point as well. If the price goes up, then you have to be disciplined about it. Okay, if the price goes up a certain amount of money, 10-20%, then go out. So you have to be disciplined about it. It's easier said than done. once you are in the market,
emotion always, start to control you. That is why sometimes people do have this new way of investment using robots.
Yes,
digital robots.
Oh yeah, robo-advisor. So that has quite a trend nowadays that people piling in money into robo-advisor because people want to have more control into where the money goes in as well. I think if anyone has invested through StashAway or Wahid Invest, what they ask you what profiles, what kind of profiles do you have, right? So similar thing I've just said earlier. Are you a risk averse? Are you a risk taking? That has always been the first question when you sign up to this robo-advisor. So they will try to understand who you are, what kind of person you are you a risk averse, are you risk? Because of that, then they will recommend you the different asset allocation that allows you to achieve the objective that you have within the risk tolerance that you are able to tolerate, right?
Yeah.
So
Yeah.
my advice, COVID-19, as you can see, what happened in 2020 is a blip. It's a blip. If you've seen the trend in the crypto market, you've seen how from January to March it's gone down very fast, and then from March onwards to December, it goes up. So it's like a T shape or it's a Nike shape kind of recovery.
Right.
So for people who are driven by emotions, they would have sold it at the dip, right, in March, and then buy it towards the end, which when the price has recovered. So you have to know your risk tolerance. You have to be disciplined in putting in money. You have to do your research to know that which sector is going to benefit from the pandemic, which sector is going to be at disadvantage when the pandemic hits, and then be disciplined about it when you want to buy, when you want to sell. So that would be my advice, general advice to the retailers out there. So it is an evergreen strategy. It's not just COVID-19. In any case, in any financial crisis, if you stick to this methodology, inshallah, you will be successful.
Right. Good. But somehow for me personally, whether it's robo-advisor or me as a retail investor, can never work. I always be a more long-term time of investor. I put the money in, will not look at it for the next perhaps a year or two. So the same thing happened to me with Bitcoin. Where I just put in the money and then suddenly say, wow, okay, I should have put more. Of course, that time. Anyway, we probably have another question, and probably this will be the last one too. This is from Steve Lee, because we have another 3-4 minutes or so. From Steve Lee. Hi, Mr. Aimi, Encik Izzaudin. How would you evaluate technology startup, crowd-funded companies before diversifying into them?
Yeah, so this is probably your territory. Imagine because of the Ataplus being an equity crowdfunding platform, right?
Let's hear from you first.
Yeah. So from my perspective, so this is more of a venture capital, more of a private equity space, where the risk is definitely higher compared to other asset classes like public equities and fixed income. Just to highlight one of the things that I found a couple of days ago on Airbnb, right? Airbnb was it had it IPO last year. I think it was third quarter or fourth quarter of 2020, and I think the market cap is about $100 billion, if I'm not mistaken. And I look at the income, and it's funny. There's no when you want to calculate the price to earnings ratio, like the share price over the earnings per share, it's not available. So what does it mean? So it means that the earnings is negative, right? It means that the earnings are negative. So it doesn't have any cash flow to give to the investors. There's no dividends because the income is negative. You have they're actually accumulating losses. But still, yet people piling in money into Airbnb. Why? I think they think that it could be the next Amazon, right? So it's about building in the scale, building in the business. Let's incur losses first in exchange of profits down the road, so that the investors are expecting profits in later years, right? So I think same perspective can be applied to technology startup and crowd-funded companies, right? Definitely in the early years of the company, they will incur losses because they need to scale up, they need to build their infrastructure, they need to build up their operations, try to acquire customers. So there's a customer acquisition cost to it. And then after that, then they are able to generate some profit, right? Even before IPO, they can still make losses, but then there's the expectation that they will be making money earlier. So given that this kind of profile of venture capital, then what should we be looking at, right? So I think first and foremost, we need to look at the founders personally. So who are the founders? Do they have? Because if you look at the financial, and the books, it will all be red. It will all be losses and whatnot, right? So you have to look at who are driving these businesses. So you look at founders. Do they have and partners? Do they have the experience in this particular space that this company is operating in. Typically, a good profile of founders are those who have been doing the business previously. They were part of the management of big companies previously. They have a lot of hands-on experience, and now they're doing it on their own, right? So they wanna start their own company. They wanna raise capitals to to expand their businesses. So these are the good profiles that we have. Taking bets on the green shoots or those who do not have any past experience could work out, but could fetch high risk. So that's why I think number one is who are the funders? Do they have the past experience to deliver this? I think second is the if you are second round investors and you look at the first round investors, who are they? Who are the first financial sponsors? So they could give
always.
you information. So if there's a lot of good names behind the early investors, that could be a good investment to pour money in. But if you're first round investors, then what you look at is the business plan, right? Do they have a business plan? And how reasonable, how feasible is the business plan, right? And always check the forecast of this business plan. Oftentimes the forecasts are overestimated, right? So how do we evaluate business plans? So to evaluate business plans, you need to understand what kind of problems they're trying to solve, and then what products can they offer to solve their problems, and how big is the problem in terms of market size of the problems, right? So you want to understand the market, you want to understand the products that they are building, you want to understand the infrastructure that they have, to enable them to develop the products and services to solve the problems. So I think those are the two main things that people can use to evaluate technology startup.
Right. Yeah, I guess I think the first thing first, people may need to understand that to invest in startups, crowdfund and so on, it's not the same as how you actually invest in the stock market. Yeah, it takes a bit more, analytics that you need to put in to be able to understand the company better, the people that's in the company, and so on, and where is it going, and so on, right? So I think that's pretty much more of education. If you can see technology companies, one way or another, as what you have mentioned it correctly just now, is a much higher risk investment. When you have a high risk investment, of course, with the crowdfund, you can see the participant of retail investors, that participate. Previously, what happens is that most of these investment are either being invested by institutional investors or as you said correctly just now, so private equity, venture capital, or even a more sophisticated investor. But with the advent of technology again, over the past years, we can see that there are more there are more companies that provide crowdfunded, like Crowdcube in the UK. Recently has been valued in billions of dollars, just by providing a platform. And you can see how some of the companies which was invested by investor in those companies which are listed in Crowdcube, being able to actually turn up some good returns, either through IPOs or through trade sales, and as well as the yield itself. Yeah. Okay, let's see if we have any more question. Let me see. I don't think we have any more question. Okay, that's one. Is there one? Okay. Yeah. Sorry. Before that, actually, our time is almost finished, but we'll perhaps allow a few more questions. Yeah, because a lot of people wants to ask Izaldin. Actually, seems a lot more questions. Yeah. Let's pick up quite a number of questions. Let's pick up one of you. From Farisa Roslan, what are your thoughts around selling properties at this time? What would the demands be like, and is it the right time? Yeah.
Okay, that's an interesting question right now. It depends. It really depends on what sort of properties that you have, right? And where is it located? Because when we talk about property, the key is always location. And Another one is price point as well, right? Obviously, if your property, for example, is selling at a high price point, then you're gonna have limited amount of people that can buy into this property. If you have a property that has a lower price point, then you're gonna have more people being able to buy it, right? So in this current market, so I imagine the question is, can I fetch a good price for my property in the current market, right? At the moment, from the perspective of prices in general, we're actually seeing a very slow increase, generally speaking, very slow increase in prices because of the oversupply market that we have in Malaysia, generally speaking. But if you look at certain hotspot in KL, for example, in Klang Valley, then that rule doesn't apply. So there are always exceptions to the cases, right? So you have certain hot areas, for example, in Kiarak or things like that. Then you're gonna be able to fetch a good price for it. But for properties that is slightly outside Klang Valley, for example, towards Nilai or Negeri Sembilan, for example, so it's going to be fetching low price. But saying that, there's only general observations, right? For example, in areas like, because I have a property in City Eco Hill, for example, right? And I've been receiving a lot of requests from the agents asking whether the property is available for rental or available for sales. So depending on the different spots in where property location you have, that you have different supply demand. I think, for example, in areas like City Eco Hill, there's a lot of people wanting to stay there because of the good neighborhood that it has. I think the property developer is SP Setia, for example. They are a good developer, and PNB has investment in SP Setia. So they've been developing good townships out there, and City Hill is one of it. And I think there's a lot of demand into City Hill in Semenyih, for example. I think we also have Eco Majestic, which is the neighbor.
Majestic, the one in Kajang, yeah.
Yes, Eco Development, yes.
Yeah.
By Tan Sri Liu. I think that's another neighborhood next to it. I think there's a lot of demands into it as well. So to answer your question, generally, right now, I think because of the interest rate is low, and a lot of people taking the opportunity to buy properties right now. But it really depends on which spots of the properties that you have. I think in areas like Semenyih, because I have experience in Semenyih.
Semenyih is unbelievable, yeah.
Development out there. I think a lot of people wants to buy into that, so you could explore and contact your local nearest agent and see what sort of prices are out there in terms of what people are willing to buy, the price level, and start to negotiate upwards from there. But for spots like in KL, definitely it's a hot market even right now because of the interest rate is low.
Right. All right. I hope that answers the question. Actually, we have a lot more, but too bad, we have only so much time. So thank you very much, Izzaddin. Thank you very much, all the audience. Thank you very much for all the questions. I'll keep on coming in with questions. We hope we will be able to answer that one way or another. We have picked up our winner for the questions. So congratulations to Nicholas. Yeah, Nicholas K. Right. Follow us on social media to watch out for our next Ask Atta Date. And we hope you'll be able to participate. Let us know if you have any other comments that you would like to, and any other comments or suggestion. Let us know. Or if you have any topics that you want us to be able to discuss in the future, do let us know too. With that, thank you very much. Thank you very much, Izzaddin. It was it's very good to have you. I think a lot of people are very excited as well. I can see that from the various comments from the FB, and hope to be able to, maybe join us again one of these days. Perhaps on other questions, other topics. like blockchain or anything else, robo advisor perhaps. Yeah. All right. Thank you very much. And off we go. Thank you. Bye bye.
Thank you for having me. Bye bye.
Thank you.